Western world expert on candlesticks. I got this very nice quote from Scott. Everyone that teaches candlesticks quotes the master. Why not go to the master? So everything you'll be doing on this basic introduction to candlesticks, you know is the right information. There's a lot of well-intentioned educators out there who teach candlesticks. Unfortunately, a lot of it is wrong. I've been working with candlesticks since the 1980s. As Joe mentioned, I've been using Western Technicals for 30 years. And in fact, I call your 1-2 punch for success if you combine candlesticks with Western Technicals, and I'll show you some ways to do that. We'll also, at the end, show you some free resources that you can get if you want to continue your education or if you want to get a free market outlook on any market of your choice. But I'll give you that information later in the session. The Japanese have a proverb, and these are Japanese candlesticks, so I throw in a lot of Japanese proverbs. If you want to cross the river, you must first build the bridge. So for those new to candlesticks, let me just spend a quick minute going over the basic construction of the candlestick line. I'm sure most of you are familiar with this, but whenever I do a webcast like this, there's always, I'd say, anywhere from 2 to 6% of those who are brand new to candlesticks. So the candlestick line is made of two components. There's a rectangular portion called the real body, and the real body is simply the relationship between the open and the close. If the close is higher than the open, we have empty or white real body. If the close is under the open, we have a black or filled in real body. You know, some of the charting services, in each signal it might be green, depending on how you set up this service. The color of the candle, it could be green for up, red for black, for down. But as long as you understand the concept that the Japanese place a lot of emphasis on the open and close relationship. The lines above and below the real body are called the shadows. Top of the shadow of the upper shadow is the high of the session. The bottom of the lower shadow is the low of the session. Now keep in mind, this works in all markets and all time frames. As long as you have open, high, low, and close, anything from a minute chart to a 15, 30-minute, a daily, weekly, even if you look at a monthly chart. It's good for Forex equities. As long as you have open, high, low, and close, everything I'll be doing here is universally applicable to all markets and all time frames. And one of the major advantages of the candlesticks is, as I mentioned before, it gives you reversal signals, early reversal signals. And the reason for that is because candlesticks give you twice the information as a traditional bar chart. What do I mean by that? Well, the candlesticks, and I most of the time call them candles, like a bar chart, will show us the price of the market that you're looking at. But what the candlestick does is give us the force of the move. And how does this help us? Well, by knowing if the force of the preceding trend is slowing up, we're getting an early indication that the market could be losing momentum and potentially reversing. So, for example, now who's in charge here? The market opened near the low and closed near the high, right? We know that the market closed here and not here because it's a white real body. Obviously, the bulls are in control. And who's in control here? Obviously, the bears. The Japanese say the real body is the essence of the price movement. And so we could use the size of the real body to gauge the market momentum. You could also, and it's beyond the scope of the session here, you could also, add volume to your analysis. So if you have a tall white candle on high volume, to me that would be more bullish than having a tall white candle on light volume. Now, who's in control here? Notice that the opening and closing are the same. Is it the bulls? Is it the bears? Or, as Robert says, equal, right? There's an equilibrium between buyers and sellers. There's no black or white real body. It looks like a cross. And this is called a doji. And with the doji, the Japanese will say the market is tired. So let's look at a quick example of a doji here. So here, on this tall green candle, and this is a nice example. Who's in charge here on this tall green candle? Remember, the market opened here and closed here. Who's in charge? The bulls, right? Now, isn't this fascinating? The next session, and once again, This could be a 5-minute chart, a daily chart, doesn't matter time frame. The next session, aren't the closes the same, right? Now, in a bar chart, that would say, okay, the market still looks good, the closes are the same, but all the close is the same here and here. What are we getting about the sense of the immediately preceding trend? Right, the market has now turned neutral. The market is tired. And what that does is increase the likelihood of the market reversing. So isn't this fascinating? Although these are the same closing prices, or just about the same prices, just by looking at the size of the real body, we can easily get a clue that the bullish momentum is dissipating. And I could spend a good half hour, 45 minutes on doji. Once again, I want to keep the session very short, maybe 45 minutes at most. But if you have a doji, you could actually use the high between the doji and the prior candle as a resistance level. So if you do happen to short here, you should keep a protective stop above the high over here. Now, notice the title of the slide. One of the best ways to make money. Anybody know the answer to one of the best ways to make money? And the answer is, okay, Robert's typing, buy low. That's one way. Sell high. Well, one of the best ways, and that's true, but one of the best ways to make money is not to lose money. At the end of the day, it's not only how much you make, but how much you didn't lose. So here, with this market, new high close for the move, and if this was a bar chart, this would be bullish. New high close, everybody's happy, it's bullish. But now that we know a little, we have a taste of the candlesticks, looking at the real body. We have a doji here, and I would not sell short because it is still a new high close, but would we be buying here? And the answer is no. If the market makes a new high for the move, I like to see it on a relatively tall white candle, ideally on high volume. When I was doing seminars for institutions, and that's what I did up until fairly recently, reveal these strategies, as Joe mentioned in the introduction, I used to do all this for institutions only, but I decided to shift over to the self-directed trader and investor, because I felt bad that the institutional traders and prop traders and market makers were getting all this information at the advantage, at the cost of the retail trader. So when I was doing seminars for the shops like JP Morgan or Goldman Sachs or big hedge funds or Fidelity and so forth, one of the shops, and I forgot which one it was, the head trader said to me, he said, "Steve, I want you to teach my traders about negative selection." And I never heard that expression before. I said, "What do you mean by negative selection?" And he said, "Tell them what not to do." And that's a great way of putting it. Negative selection. Knowing not to go long here would have saved you, at least $40 per share. Or if you use candles for options, many of us are not going to trade Google or Apple outright. You could use these strategies for options as well, Now, here are some samples of candlestick signals. So, for example, we have the hammer, very long lower shadow, real body at the top end of the trading range, a shooting star, a bullish engulfing pattern where the white candle wraps around the black candle, a bearish engulfing pattern where a black candle wraps around the white candle. So let's think about what each of these candle signals are telling us about the psychology of the market. So with the hammer, the Japanese would say the market is hammering out a base. And I think we could understand what's happening with the psychology. The market opens here, sells off during the session, whether that session is a day session or a 15-minute chart, doesn't matter. And then by the end of the session closes, in this case, at the high of the session. So this is obviously a potentially bullish signal. The low of the hammer should be support. The shooting star, not surprisingly, is a bearish signal. That long upper shadow is showing us the market is rejecting higher levels. The engulfing pattern, the white candle wraps around the black real body. We can see the bulls are taking over from the bears, right? Candlesticks are very simple to construct, but very powerful in diagnosis. A bearish engulfing pattern is a black real body coming after a white real body. The bears are wresting control of the market from the bulls. And there are a lot of nuances with these candle signals. You know, for example, the hammer should come after a downtrend. A bullish engulfing pattern should come after a downtrend also. A bearish engulfing pattern should come after an uptrend. But we can see just by the shape of the candlestick lines how they visually display who's winning the battle between the bulls and the bears. And let's see how these visual insights can really benefit your trading. There was an article in Bloomberg magazine that said fortunes are made by those who can call the next turn. So let's look at an example of the advantage of what we call Nissen candlesticks. And the reason we call them Nissen candlesticks is because it's candlestick education the right way. So let's look at this. So here we have a hammer. So let's say we buy on this hammer, and this is actually a very good buying signal because this hammer is confirming a prior low. So if we buy on the hammer, and so the market's around 395, and we get exit at the doji. See, this doji, because it's a new high close, we wouldn't sell short. I wouldn't initiate a new short position, but you could use candlesticks for exiting. So the doji over here, I would use to exit. So in that case, we potentially could have made, again, this is hypothetical without including commissions, we could have made $52 a share. Now, let's say we used a Western indicator, and this happens to be the MACD, the moving average convergence divergence. I joke around, I call that the Scottish oscillator, the MACD. I'm not going to go into what it is. It's a popular oscillator, but essentially, when the blue line crosses above the yellowish line, it's telling us the trend is turning up. However, unfortunately, like many Western signals, they're lagging indicators. So candles are pure price action. So the hammer is formed on the day, in this case, if it's a daily chart, on the day formed. With the MACD, moving averages, trend lines, you have to wait days or weeks to get a signal. So here we have the MACD crossover. That meant you potentially would have gotten a buy signal over here. And that could have been at around $418. We still could have used the doji to exit. And sure, we made a nice profit. No arguing about the profit. But the beauty of the candlesticks is it allowed you to potentially get into a trade early and always use a stop. Okay, I would have had a protective stop. Normally it's under the low of the hammer. I would have given it to under the low over here. But assuming we bought on the hammer and we had a protective stop under here, okay, we could have generated potentially a hypothetical $23 a share profit. So on 100 shares, this means an extra $2,300 in your portfolio. And this is an example of what we mean by the early reversal signals of candlesticks. Okay, so here we have a shooting star. See the minus S, and we're going to talk about this a little later on. This is, we worked with eSignal to have what we call Nissen candle highlighter, and you're going to be able to pull up any chart and have any and all of our favorite 28 candlestick signals on that chart. So here I just highlighted the shooting star. You know, we have a doji here, but I wanted to show you what this minus S was all about. And I'll tell you about the Nissen candle highlighter a little bit later on. It's brand new. I think you'll find it really exciting and a great value added to your trading. But here we had a shooting star, nice shorting signal because it's confirming an area set by a doji over here. And if you do short on the shooting star, you keep a protective stop above the high of the shooting star. So here we have another shooting star, and this I didn't have the candle highlighter on. This is a shooting star, and note there's no candlestick signals here, but just as we would have resistance up here at a recent high, so we should have resistance on a candlestick chart. Remember, anything you do with a bar chart, any of your favorite Western indicators, moving averages, trend lines, volumes, oscillators, Fibonacci retracements, anything you do at all that you find works really well in your market, use it. And then do what the Japanese do for generations since the 1870s. Use it for final confirmation. So here we have a resistance area, and we get a shooting star confirming resistance. Again, I would have a protective stop. Now, instead of above the high of the shooting star, I would have a stop here. Why? Wouldn't it be upsetting to get stopped out over here? In other you put a protective stop on a short position over here, only to have the market reverse, because even if the market closes here or gets here, isn't this still resistance? But this is a good example of the power, and we'll look at this in the next couple of slides, of combining candlesticks with Western indicators. The more signals you have joined together, the more likely a reversal. And the Japanese have a proverb that says, "He whose ranks are united in purpose will be victorious." And what I mean by this, as referenced by this proverb, is if you have a candlestick signal confirming a Western signal, the odds of a turn are much, much higher. And this was an article, an interview about me a few years ago, actually back in all the way 2003. Look how young I look. But the reason I wanted to show you this is because during the interview, I didn't suggest a title. They came up with the title, Helping East Meets West. And I'm glad they did, because I guess they got by the interview. They understood enough based on the interview and my answers to the questions, how important it is to be fully educated on candlesticks and to add it to Western indicators. So here, for example, this was one of the charts I was doing for an institution, and they found the 25-day moving average worked really well in their market. I had no way of knowing this. All right, that's because they were following this market. And likewise, you may find you have your particular markets that you find moving averages work pretty well, a specific moving average or a specific Western indicator. Stay with it. So they look how nicely the 25-day moving average worked. But what I was able to tell them, and they sent out a special email alert to their clients, was over here we had a reversal signal, an early reversal signal. This is actually called the gravestone doji, and it's an important reversal signal. And so this was an early alert. They got final confirmation over here because it closed under the 25-day moving average. But the earliest indication came with this gravestone doji. The final confirmation came on a close under a moving average, which they were familiar with there, because they know this particular market. Bollinger Bands. If you like Bollinger Bands like I do, stick with it. Here we had a series of doji at the top end of the Bollinger Band. To me, the top end of the Bollinger Band is showing us the market is overextended. Candlestick signal, series of doji, a shooting star, and a Western signal. Here we have a bearish engulfing pattern, the red wrapping around the green. Now, imagine knowing before the trades when a new trend is starting, that's what the candlesticks will let you do. And so what I'm going to do is show you some more examples of hammers and, bullish engulfing patterns. But I want to do it through the eyes of our new Nissen candle highlighter for E-signal. And what this lets you do is you could pull up any market in any time frame, and it'll highlight all the candlestick signals on the chart. And what that's going to let you do is help you get on those golden trading opportunities. I had this cartoon made up. I can't believe I missed it. So whatever markets you look at, just pull up the chart and it'll have a candlestick signal. So let me show you an example of how this works. So here in this particular market, notice the plus H. We know it's a hammer. And it's a correct definition of a hammer because I personally I worked with a programmer, but I designed what the criteria were to define a hammer. Now, a hammer has to come after a downtrend. How did we define a downtrend? Well, it's proprietary. We use moving average crossovers, average true ranges. It was actually quite complicated. But this is a hammer. Now, notice these are not hammers here, although it has a long lower shadow, because the hammer has to come after a downtrend. So little plus H means that you have a hammer there. Now, let's imagine with the Nissen candle highlighter, you pull up this chart, okay? You see you have a hammer over here, and this is when they really become important. We have a hammer plus H over here. Now, this is a rising window. It's a gap higher. And a rising window, the Japanese call gaps windows. If we have a gap, the gap becomes a potential support area. So you could pull this up. You see there's a hammer here right at a support level. This would be a potential buying opportunity, keeping a protective stop under the lows here. Here's a great opportunity also. All right, here I just had the engulfing pattern highlighted. This would be a hammer also, but I didn't have that. Remember, you could have any and all of the 28 candlestick signals. And I'll tell you, many of you are new to candlesticks. I'll tell you how you can get explanations of all the candlestick signals that are within the Nissen candle highlighter. But here you have a bullish engulfing pattern, and even if you did not know this was a hammer, you could see this was a support area. So the NCH alerts you to a bullish engulfing pattern. Look at this. Shooting star after shooting star after shooting star. Do you think this market had problems right around the 83 level? Don't think so, right? Now, another way to do this, since many of us would rather buy than go short, what you could do is, we have a shooting star here, over here, over here. If we have a strong close, okay, this might have closed 10 cents above the high of the shooting star here, but let's say this closed 50 cents or so above the high, the resistance area here in your flat. In other words, you have no position. You could use these shooting stars as resistance, and you could say, okay, if it closes at, say, $83, that is a break of resistance, and you can actually think about buying it. In other words, do a momentum trade, trading on a breakout. Likewise, let's imagine this was, again, I didn't have the hammer as one of the highlighted things on this chart, but let's imagine this is a hammer, and you don't want to buy. Let's say you want to go short. You would do that on a close under the hammer. So if the market closed under the hammer, like say over here, one good thing about short, actually you probably wouldn't because they have another hammer over here. But if it closes under, say, the low of the hammer here, you'd want to be out of longs, or you may want to consider shorting. Or let's say you get a hammer, and let's say by the time you get the hammer, the close is all the way up here. If the close is here and your stop is down here, so let's say the close is here, the stop is here, and your target is up here, that's not a good risk-reward trade, right? Because you're risking as much as you're making. What you could do is, if you know it's a hammer, assuming we have the candle highlighter set to show us hammers, you could set up an alert with an e-signal. Anytime the market gets near the low of the hammer, you could think about buying it. You'll be alerted that you're at a support area. Okay, and this is something we all would want to look for here. Look at these bullish engulfing patterns right at the same support area. And you have a clean-cut stop-out area. Again, this is probably a hammer, but I just wanted to show you the engulfing patterns here. And something like this, I'd set a protective stop under the low of this bullish engulfing pattern. And I'll tell you, look at this trading range the market broke out of. The bigger the base, the more substantial the rally. And notice something interesting here, although it's not one of the particular candlestick signals I had a chart on, but I did talk about it before. Remember I talked about if the market gaps higher, the Japanese call it the rising window and a window support. Look at this. See this gap? Look at what happened here. The bullish engulfing pattern right at a support area. So here's an example of the value of using candlesticks. We have a series, let me go back here. We have a series, and this was the high in Apple, a series of small real bodies, some doji over here. Not enough of a reason to go short, but you know, from the rally from the hammer here, the market moving, making higher highs, and notice what's happening. It's flattening out. It's rolling over. And we have a series of small real bodies, so time to protect ourselves. Then we have a gap down, a falling window. What that does is put actually an island top in place. The market gapped up and gapped down. But even if we didn't know about the island top, a falling window is bearish, and it becomes resistant. So look at this. See this falling window here where my arrow is, right around 650? Notice what became a resistance area, that falling window. But anyway, we have a falling window confirming a top at around $700. Now, here we have a bearish crossover. when a short-term moving average crosses under the long-term moving average, and I personally look at a 20 and a 50-day moving average, simple moving average, that's, the Japanese call that a dead cross. And so let's imagine that we were using these moving averages to know when to exit our position. We would have waited until the market got to $650. So in other words, by using the early reversals of candles, we made an extra potential $50 per share on Apple. And that means, let's say we were long, we would have known to exit $50 per share earlier. Now let me give you some really cool things you'll be getting with the Nissen Candle Highlighter. And once again, we will be doing a raffle for anybody on the session here for a free Nissen Candle Highlighter. All right, so I'm going to be scrolling along, and we'll do that in a little bit. But let me give you a heads up. NCH, Nissen Candle Highlighter, it's a tool. It's not a trading system. So when you see a minus S and a downward pointing arrow, that means it's a shooting star. It's a potentially bearish signal. It doesn't mean you go short there. Here's where you need your educations. If you find a star confirming a resistance area, then you could think about going short. But what's great about the Nissen Candle Highlighter is it saves time. It gives you trading confidence, because if you pull up a chart and you're not sure if it's a candlestick signal or not, a true candlestick signal or not, you could be 100% confident it is if it's picked up by Nissen Candle Highlighter. Now, for those of you who are new to candlesticks and you want to invest in the Candle Highlighter, what you're going to do, for anybody, and I'll give you the link in a minute, anybody who orders by midnight tonight, and there is a 10-day money-back guarantee, so you don't have to worry about ordering quickly, you're going to get a video reference that has all 28 candlestick signals in it. Okay, it's a half-hour video. When you invest in the Nissen Candle Highlighter, you will get a link that gives you a resource page, that tells you exactly how to install the Nissen Candle Highlighter onto your eSignal. We have great technical support. Obviously, if you have an eSignal question, eSignal has top-tier technical support, but if you have a Nissen Candle Highlighter question, you will be contacting us. Essentially, NCH, Nissen Candle Highlighter, does all the work for you. I'm going to put the link on here. I'm just going to post it there. Is a 10-day money-back guarantee from the time you order it. And as a thank you for attending the session, and I'll be doing the raffle in a minute, if you go to that link, we'll also give you a free ebook. I liked it, the idea so much, I have free ebook 2 times just to emphasize it. The 4 common and costly mistakes almost every trader makes and how to correct them instantly. You'll be getting that if you go to that special link. And we're also going to invite you to a special webcast where you can ask me any U.S. or Forex market of your choice, and I'll give you my outlook on that market. And you will be getting a half-price special on the NCH for eSignal. So just go to this link I posted here, learnfromstevenissen.com/eSignal. All I'll ask you is to put in your username and password. It is your email is kept strictly confidential. We all hate spam, so it'll be kept private. But you will get instantly that free ebook. We'll be added to the bonus webcast, where you can ask me about any U.S. market of your choice, and you could read about all the advantages of the Nissen Candle Highlighter for eSignal and the half price. And that's all going to end, by the way, in a couple of days. So as promised, let me do the raffle for the eSignal. And we have Keith Nellis. Okay, if you're here, type here, because this raffle is only valid for people who are actually attending, Keith. And if you're not here, we'll go to somebody else. 3, 2. Okay, Keith Nellis 2. Okay, Keith. Okay, so Keith, contact Paul at candlecharts.com. And actually, anybody who has any questions about, and I should have actually had this as a slide, anybody who has any questions, contact Paul at candlecharts.com. paul@candlecharts.com. And if you're interested in, getting our educational material in addition to NCH, say you focus on particular products, we have a lot of customized education. So you can contact paul@candlecharts.com. Tell him that you either you watched the video, because we're going to be posting this as a video for eSignal, or you watch this as live, and he will have the ability to give you special discounts on any and all of our products. So once again, go to this link. Let me go back here to, whoops. Go to this link to get all these free bonuses. And with that, I will turn it over for any questions you may have. I can stay around for a couple of minutes. And I know, we went through quite a bit today. My feeling is everybody's busy, especially towards the end of the day. Okay, thanks for posting that, Joe. paul@candlecharts.com. Okay, Keith wants to know, does it work for day trading? Definitely. I would say a good 40 to 50% of our candlecharts.com family are day traders. Top 2 or 3 candles for tops or bottoms, Terry is asking. You really can't pick the top 2 or 3. So, for example, there's a bearish engulfing pattern where the black candle wraps around a white candle. There's also something called the dark cloud cover, where a black candle gets deeply into the white candle but doesn't wrap around it. Now, normally, we would think the bearish engulfing pattern, because the black real body wraps around the white real body, is more bearish. However, let me ask you a question. Which do you think is more likely reversal, if we have a bearish engulfing pattern that does not confirm resistance as compared to a dark cloud cover that does confirm resistance? And the answer to me is if we have a dark cloud cover confirming resistance. So it's not just which candlestick signals are best, it's what, if they're confirming or Western indicators. And I'm getting questions about spinning tops and high waves. For people who want to know, the other candle signals, like the hanging man, the high wave, the, what the gravestone doji is, the morning and evening stars, and not only what they are, but how to use them correctly. Because let's face it, you can just go on the internet and type in hanging man or morning star, and they'll show you what it is. But we see traders blown out of the market because they know what the candlestick signal looks like, but they don't know what to do with it. You could have a hammer, and at times you buy with a hammer, at other times you completely ignore the hammer. And that's what our education is all about. Not only recognizing the candlestick signal, but what to do with it. And that's why you should contact Paul at candlecharts.com and tell him what markets you trade, and he'll tell you what the best resources are. Okay, what part of the candle line is best for drawing trend lines? Rick, I use highs and lows. Just as we do on a bar chart, I do it the same way on a candlestick chart. Okay, any other questions? Okay, so with that, I see, okay, Nick has a question about time frame. Okay, I'll just wait half a minute for that. Oh, okay, let me see. Time frame. Let me see if make sure I didn't miss anything. Does it work for day trading? Ask that. Okay, Nick wants to know best intraday time frame for candles. It's not, and this is a very common question. Normally the question is, what's the best time frame for candles? And I say that's the wrong question. The question is, what is the best time for your trading style? In other words, if you're a type A personality and you like a lot of action, you're going to want to do intraday. If you're more analytical and you want to consider all the alternatives, you may want to be a swing trader. And as far as, best day trading time frames, I personally, when I trade myself, because of my style, because I'm running a company, I set the trades the night before. Because I'm running a company, I don't have time to look at intraday charts like 15 and 30 minutes and 5 minutes. So I can't tell you the best intraday time frame. You're going to have to find what works best for you for your style of trading. But I will personally look at daily candle charts, and then I'll look at a 30 and 60 minute. And again, that's because I'll set up my trades for the next day the night before, because the next day, I have all my orders in before the markets open. Okay, so with that, I want to thank you for joining me and turn it over to you for any final comments, Joe.
Great. Thank you very much, Steve. I hope everybody can hear me. That was a really great presentation. With a lot of good feedback, a lot of good questions. He did put a link there for the Learn Front Stephen Nyson.com to learn. Okay.
Yeah, let me do it again.
Sure, feel free. And also, you'll notice down on the very bottom. Okay, so on the very bottom left corner, you will actually see, Nick, Steve's information, Paul's email address, my 800 number, and email as well. So you're also welcome to give me a call if you have any questions, need assistance. And also, again, we do have a 30-day risk-free trial offer, excluding exchange fees. And, we'll be happy to go ahead and get you set up and then have you contact Steve to get you set up for his indicators. And in the meantime, we'll take a few more minutes. If anybody has any more questions, feel free to type that in. And by the way, I wanted to also add, just in case, I know we had a little issue with connection for everybody, I am recording this webinar, so as soon as the recording is available, everybody who had attended today will get a copy of today's recorded webinar.
Okay, it looks like Nick wants to know, does Vime correlate with candles? Yes, I mentioned before, Vime actually is one of my key indicators when I'm trading equities, but I like to see high volume with breakouts. I like to see a tall white candle and high volume. Volume on the downside is not that important. The saying is the market could fall of its own weight. So yeah, volume is a great add-on. It's a great synergy with candlesticks.
All right, great. Looks like Mark was able to get to that link. That's good. Thanks, Mark.
Okay, thanks again, everybody. I'll wrap it. I'll be logging out now. Thanks for joining me, and
Sure.
Again, thanks, Joe, for the opportunity to be speaking to such a energetic and getting great questions. So I really appreciate that. Okay,
Oh yeah,
thanks,
great.
everybody.
Thanks, Stephen. Again, we'll do this again down the future. So you feel free to log off, and I'll be happy to answer any more questions anybody has today. If not, we'll take a couple more minutes. Great. Thanks, Steve. Thanks for them. Thanks, Fong, for taking the time to attend today. Appreciate it. Got a couple more typing in here. Thanks. Oh, you're very welcome, Mr. Nguyen. All right, great. So again, as I mentioned to everybody who attended, I'll email everybody with a copy of today's webinar. I recorded them so that everybody can sit down and watch them as well. I believe a few weren't able to get in the beginning portion of it, so hopefully they'll be able to watch it at their convenience. And wanted to thank everybody again for attending. On behalf of me and Steve, everybody have a great night and take care. Thank you.